Imagine waking up this morning, checking your portfolio, and watching everything turn red. Stocks, futures, airline shares, all sliding. The S&P 500 futures down 1.5% and the Dow Jones pointing to a 1.6% drop before the opening bell has even rung. Oil surging past $81 a barrel overnight, and somewhere in the back of your mind, a quiet but urgent question begins to form. Is this the beginning of something much bigger? Because here's the thing nobody is saying out loud yet. What is happening right now in global markets on Tuesday, March 3rd, 2026, is not just a blip. This is a signal, and if you know how to read it, it could be one of the most important financial moments of this entire decade for anyone holding, or considering holding, precious metals. Today's market action is sending a message, and I am going to decode every single part of it for you. Today's market close told the story before Tuesday even opened. Benchmark U.S. crude closed at $74.47 a barrel, jumping 3.24 in a single session, and Brent crude, the international standard, hit $81.30, gaining 3.56. Stocks are bleeding, oil is surging, and gold and silver are standing at a crossroads that could define the next 12 months of your wealth. So stay with me, because what I'm about to share may be the most valuable thing you watch today. Hey, welcome back. Or if you're brand new here, welcome to Silver Signals. I'm Yali Jiang, and this channel exists for one reason: to cut through the noise, read the signals that most people miss, and give you the kind of honest, grounded perspective on precious metals and global markets that you actually need, not the kind that just tells you what you want to hear. If you have been following this channel, you know we do not do hype, we do analysis. And today, what I am looking at in these markets is something genuinely worth your full attention. So if you have not already, hit that subscribe button right now. Not because I am asking you out of habit, but because on days like today, when markets are moving this fast, you genuinely do not want to miss what comes next. In today's video, we are going to break down exactly what is happening with the Iran war and global oil markets. And we are going to look at why stocks are set up for serious pain this Tuesday. We are going to dig into what all of this means for gold and silver specifically, including the latest price action and what the smart money appears to be doing. And we are going to end with an insight that I genuinely believe most investors are not seeing yet. So let us start at the top and ask what is actually happening and why does it matter so much. The Iran war has introduced something that global markets absolutely hate above almost anything else: uncertainty in energy supply, and that is the core of this story. Once you understand that, everything else, the stock sell-off, the oil spike, the airline collapse, all of it makes complete sense. Now, oil markets have been rattled before, and Stephen Innes, managing partner at SPI Asset Management, made a fascinating point that I want you to really sit with. He noted that since the year 2000, there have been 22 single-day oil price spikes of more than 10%, and in most of those cases, equity markets recovered. Energy shocks do not automatically derail stocks unless they are severe and sustained, and that is the key phrase: severe and sustained. Because right now, the shock is severe, with oil jumping multiple dollars in a single session, and airline stocks getting hammered as Asian markets go into freefall. South Korea's Kospi plunged 7.2% as markets reopened Tuesday. Japan's Nikkei sank 3.1%, closing at 56,279. Germany's DAX dropped 2.9%. France's CAC 40 fell 2.2%, and Britain's FTSE 100 declined 2.2%. These are not small numbers. This is coordinated global selling, and it is happening fast. But here is where it gets more nuanced and more interesting, as Adam Crisafulli from Vital Knowledge pointed out something that should concern every investor. He noted that markets are growing increasingly worried that a decapitated and leaderless Iranian government and military could trigger a prolonged retaliatory response, targeting key economic and energy infrastructure across the region for weeks to come. That word, prolonged, is the one that should make every investor sit up straight, because markets can absorb a one-day oil spike, but they struggle with sustained disruption. Think about what the Strait of Hormuz actually is and why it matters so much. It is a narrow waterway, barely 21 miles wide at its narrowest point, between Iran and Oman, and through it flows roughly 20% of the world's entire oil supply. If that strait gets disrupted, even partially, even temporarily, the ripple effects on global energy prices would be unlike anything we have seen in a generation. The strategists at Morgan Stanley, led by Michael Wilson, made it clear that for this war to knock down U.S. stocks in a significant and sustained way, oil would likely need to climb above $100 per barrel. We are at $81 right now, which means there's still $19 of runway to the danger zone. The question is, are we heading there? Now let us talk about who gets hurt first in a scenario like this, because this is where you can see the warning signals play out in real time. Airlines are the most obvious and immediate casualty, as American Airlines, United, and Delta all slipped roughly 3% in Tuesday's pre-market alone, after already being Monday's biggest losers on Wall Street. When oil jumps $3 in a single session, that is a massive and immediate hit to profitability, and the fighting in the Middle East has already closed airports and left travelers stranded across the region. Asian airline stocks collapsed too, as Korean Air fell 10.3% in a single session. Japan Airlines dropped 6.4%. ANA was down 3.3%, and Qantas in Australia lost 1.8%. When airlines fall, the cascade does not stop there, because oil up means airlines down, which pressures travel and consumer sectors and raises inflation fears. That, in turn, complicates the Federal Reserve's calculus on interest rates, bond markets react, and suddenly, a geopolitical event in the Middle East is affecting your mortgage rate, your savings account, and the value of every equity in your retirement portfolio. We have seen this movie before with a 1973 Arab oil embargo, the Gulf War in 1990, and the 2003 invasion of Iraq. Each time markets wobbled, and each time there was a window where certain assets dramatically outperformed while equities struggled, every single time one of those assets was gold, and usually silver followed. So let me ask you something right now, and I genuinely want to know your answer. When a geopolitical shock like this hits, what is your first instinct? Do you go to cash, buy the dip in stocks, or move toward hard assets like gold and silver? Your answer to that question probably says a great deal about how the next 6 months are going to treat your portfolio. And I read every comment on this channel because on a video like today's, I am genuinely curious what this community is thinking. Okay, let us talk about gold and silver because this is where the story gets genuinely exciting and nuanced. Gold is at its core a fear asset and an inflation hedge, and both of those qualities are being activated simultaneously right now. When global indices are melting and oil is spiking, gold gets bought. Because when the world feels unstable and uncertain, people reach for something real, tangible, and finite. If oil sustains above $80, $85, or $90, then energy inflation bleeds into transportation, manufacturing, food, and heating costs and becomes structural within the economy. Structural inflation is gold's best friend because it is the environment where gold does not just hold value, but compounds it, often dramatically outpacing the rate at which everything else loses purchasing power. Silver's story is different because it has a dual nature as both a monetary metal and an industrial metal, which makes it uniquely interesting in a moment like this. If a serious oil shock tips the global economy toward recession, industrial demand for silver could soften. But silver is also critical to solar panels, electric vehicles, and the broader green energy transition. An energy crisis caused by oil disruption actually accelerates urgency to invest in renewable alternatives, which strengthens the long-term demand thesis for silver. What we are watching now is whether silver finds support and begins moving in lockstep with gold, especially with an elevated gold-to-silver ratio, signaling potential undervaluation. History tells us that not every oil shock leads to sustained market collapse, but there is a pattern that holds across decades of conflict-driven disruptions. In the short term, equities sell off, oil spikes, and gold rises sharply, while in the medium term, outcomes depend on escalation and structural energy disruption. In the long-term markets almost always recover, but the specific investments you hold during turbulence make an enormous difference to your wealth trajectory. During the Gulf War in 1990, U.S. stocks dropped roughly 20% from peak to trough, while oil spiked and gold rose approximately 15% during the conflict period. That 15% gain relative to a 20% equity decline represented a 35-point swing in relative performance for a balanced portfolio. It shows that it is not about predicting exactly what happens, but about positioning yourself so that whichever way the crisis evolves, you have exposure to assets that benefit from that outcome. Morgan Stanley's $100 oil threshold is useful. But even if oil does not hit $100, the underlying drivers of this crisis do not simply disappear. Geopolitical instability, energy supply, vulnerability, and inflationary pressure become part of the backdrop and the new normal. In that environment, precious metals serve not just as a hedge, but as structural portfolio insurance, in a way they have not needed to since the turbulent early years of this century. Now here is the insight almost nobody in mainstream financial media is talking about. In 2026, the 5,000-year-old reflex to reach for gold and silver during instability is being amplified by unprecedented retail investor access to precious metals. The democratization of precious metals investing means that when fear spikes, the flow of money into gold and silver is faster, broader, and more sustained than any historical precedent can fully account for. When the 1973 oil embargo hit, the average person could not easily buy gold, but today you can buy fractional physical gold online, order silver coins to your door, or access gold ETFs through any brokerage account. The reactive buying that historically took weeks can now happen in days or even hours, and the supply of gold and silver remains finite and difficult to expand. The ratio of new demand to available supply is shifting in real time, and that is exactly the kind of signal this channel was built to help you read. So here's the full picture on March 3rd, 2026, with S&P futures down 1.5%, Dow futures down 1.6%, oil at $81.30 and rising, and the Strait of Hormuz under genuine threat. Global markets from Tokyo to Seoul to Frankfurt are in retreat, and in the middle of that, chaos, gold, and silver are standing where they have always stood in moments like this, not as speculation, not as a bet, but as bedrock, and as the thing that holds its value when everything else is being repriced by fear. The Iran war's impact on oil is real and significant, and it is creating genuine volatility in global markets that we should all take seriously. The question is never whether you should pay attention to signals like these, but how you position yourself for the next chapter of the story, whether it lasts weeks, months, or longer. Keep your eye on the $100 oil threshold, watch the Strait of Hormuz situation closely, monitor airline and consumer stocks, and track gold and silver price action, because those are your signals right now. If you found real value in today's breakdown, I would truly appreciate it if you gave this video a like, because it helps get this analysis in front of people who need it. If you are not yet subscribed, hit subscribe and turn on notifications, because the next few weeks in these markets are going to move fast, and you do not want to miss a signal. I am Yali Jiang. This is Silver Signals, and I will see you in the next one, so stay sharp, stay informed, and as always, follow the signals, not the noise.